Hey guys, welcome to this video, and in this video I'll be teaching a very simple smart money concept, liquidity, that will make a lot of changes in your forex trading career. And here is what I mean. It's just very simple. There is no complications on it. Okay, so most times most traders do ask, okay, aware of structures, right? And I know what a break of structure, higher high, higher lows. But you see that sometimes the markets come in a bullish market to grab a higher low, then still continue that bullish run. Okay, still forming more higher highs, higher low, higher highs, higher low, just like that. Okay, and the reason why here is just because of liquidity. Okay, because liquidity is the fuel to price, is the only thing that sponsors the price. Once there is no liquidity for price to grab, but there is always a liquidity. But if the liquidity that has sponsored the price to a particular level start getting exhausting, at that point you see that the markets will stop moving fast the way it was. Okay, it will become weaker. It will now be ranging, trying to engineer liquidity. And what is liquidity? Liquidity is just a very simple manipulation that the big people here, the banks, the speculators and the hedge funds, they use in manipulating the chart. Okay, and if you don't understand this liquidity, go and watch the previous video that I've already made on liquidity. Okay, so looking at here right now, you can see that this is just a very simple chart work. Okay, and why did I say that it's simple? Okay, just about you following your structures. Okay, higher highs, higher low, read it just like that. Okay, and if you look here, there is just a particular A plus setup that most times once market comes to it, out of 10, 8 must go perfectly well. Okay, 8 must go perfectly well. There are things that makes a low very strong for price to break. And what are those things? These are liquidity. Okay, so in a case where you see market giving you that higher high, right, higher low, higher high, higher low, higher high, then higher low, it's supposed to form a higher low to form a higher high, but price will just come, take out that higher low, and a lot of people will be thinking that this is a break of structure. And it is not a break of structure. This is just very simple, guys. This is very simple, and a lot of people will be looking to buy from a supply area which is going to be resting along this region, along this impulse that breaks structure to the downside. Okay, and the next thing that they will see is price will respect that supply. Okay, then the next thing, price will take them out and form a new higher high. Okay, so a lot of people now be questioning, is this no longer a bullish market that just changed to bearish now, and now we're trying to trade the bearish trend and the market just switched back again? This is just very simple. Liquidity price needed to grab liquidity. It needed something that would sponsor it to the next area of interest for the banks. Okay, that is why price had to, okay, since most lows people keep their stop losses on the lows, price needed to come take out and grab some orders below those lows, then push. Okay, that's just the way price move. Okay, and here the concept is just very simple. For you to take a buy using this strategy, this A plus setup, okay, you need to wait for what? Price to give you that structural push, okay, which is higher high, higher low, right, higher high, higher low. So how many people or how many traders are liquidated here? A lot of people are always looking to buy from here, right, which is very good. Looking to buy from the demand that caused that impulse that breaks structure to the upside, right? And at this point they get taken out, and as they get taken out, what next? Markets will now push and still go their way and still cause what? A break of structure. Okay, so this is just what it is, and you just need to learn how to spot them. Okay, so if market does this, you need to be very careful. That is why most times when market breaks structure like this, we the smart money concept traders we don't wait for market to put into supply. We want to see more structural breaks to the downside. Okay, this is the first one. Then this second one, after this break of this second one, then we'll now validate it that is a change of character. Market has switched from this bullish market to what? Bearish. Okay, so that is just the way the market plays, and you need to be very, very careful. Okay, so at this point, if it looks like this, you just have to wait to see what price will do. So most times, once price does something like this, you see that price will break structure to the upside, and what will happen? Price will start retracing back. So upon this take of these lows, price has made this low, which you can actually see here, a strong low. That is a low that price will find very, very difficult to break below it. Okay, and if you look here, most times price will leave that demand or that block before breaking that structure. Okay, so after the breaking of that structure, it validates every zone resting along this region. So for price to come and do something like this, it will be very, very difficult for price to still break and still start breaking. No, it will be very, very difficult. So that is why most times that this setup appears, it tends to hold. But the only thing about it is patience of waiting for something like this to happen is always a very strong, thing to do, because sometimes can get enticed into some trade, feel that you are missing out and this and that, and at the end of the day you won't still make the win. So it's better for you to wait for a plus setup. You can just copy it like this, have it in your list, and always look out for something like this. If I'm buying from this demand, how is the demand presented? How is the supply presented? Did the high that caused that demand sweep liquidity before breaking structure? These are the things that will validate your zones and area of interest for you. Okay, so looking at here, you can see that this is a strong low, right? And price broke structure, validating this low. So any demand here is what we're meant to be interested in taking our buys from. So all we just want to do is to plot out those demand areas resting along this region. We want to see price pull into them, tap into them. Then you go to the lower time frame on the 15 minutes, 5 minutes, look for change of character. Then after the change of character, you look to buy from a demand that either stalled liquidity before that push. Okay, so and as you are buying, you should also be aware of and as you are buying, you should also be aware of external liquidity that will be resting along this high. Okay, so it's not necessarily target the high every time. No, you can at least get your 1 to 3, 1 to 4, then minimize your losses by tightening your stop loss, breaking even your trade, and wait to see the full TP. Okay, so that is it for the buying for the bullish market. So the next one is the bearish market, which you can see here. So the next one is the bearish market, whereby you are having a lower low, right? Lower low, lower high, lower low, lower high, lower low. Okay, break of structure, right? Then you see price come for the highs. Okay, price just come, take out this high. A lot of people will be thinking that this is a break of structure, okay, which is not a break of structure. As a smart money trader that understands liquidity. And the next one is the bearish market. Okay, how do you take a quality sells in a bearish market? Whenever you are seeing a market structural pattern that shows you that yes, we are forming this lower high, this lower low, lower high, lower low, lower high, lower low. Then the next thing you see is price breaking structure to the upside, and a lot of people get enticed with this demand that will be resting here. Okay, so you need to be very, very careful when you are trading this. You need to be very, very careful. As I said, you need to be very, very careful. Always wait for what? 2 times break of structure inside. First of all, this is the first break, right? Change character, right? You want to still see price break structure again. Then that should validate that this market has already switched from this bearish market to the bullish market. Okay, so when you have something like this, you can see price break. A lot of people wants to buy from here. They set their limits on the demand, right? They set their limits just like the way you see right here. Okay, they set their limits for buys here, and they want to have to target the highs, and the next thing you will see is price will take them out and still buy. Okay, the reason why is liquidity. It's just very simple. Okay, so if you look here now, you want to see price take out this high which already stored demand. Okay, sorry, which already stored supply. Okay, price take it out, then flipped bullish for so many people's eyes. But if you understand liquidity concept, you shouldn't validate this as your change of character. Then the next thing you want to see is a break of structure to the downside, right? That is the second things you need to look out for this strategy. And the third thing is your point of interest. Your point of interest. Where is your point of interest? Your point of interest should be around this discounted price level, at least above the 50% price. Okay, above the 50% price, which you can see just have something like this. So on the 15 minutes, once price push and taps into the zone on the 15 minutes, look for change of character. Okay, change of character, then you look to what? Sell. It's just very simple like that. So that is the only way you can get this high probability trade setup. But it's very, very hard to wait for setups like this. Okay, but it's better to wait for this kind of setup than to sit and wait for setup that will end up keeping you at a consistent losses every time. Okay, so the next thing is, now we're going to be going to the live chart just to see how this thing works and how I analyze BTC right here on this chart, and people saw me post this video, analyzed it using this simple concept, and it has already played out twice. Okay, twice, and I find it that price find it very, very difficult to break this low or this strong highs. Okay, so when you have something like this, okay, that swept liquidity, swept a high before a break of structure, you should call it a what? A strong high. Okay, that is a high that is going to be very, very hard for price to break. So it's very strong for price to just come and violate it anyhow, just like a regular high you see. Okay, so this is way different from what you are going to be seeing. Okay, so you call this what? Your strong high. So now let's go to the market and get to find out our strong low, then our strong highs, and see how it plays out.